Good morning, and welcome to our discussion, 6 Ways to Calm Client Fears. My name is Chris McDonald, and I am joined by Steve Rohrig and John Summers, and we are here on the 4th floor of the SMS home office in Omaha, Nebraska. I'd like to introduce Steve and John. I'm lucky to be joined by these two busy fellas here today. Steve is our Director of Training and AVP here at SMS, who helps keep us abreast of all issues in the industry. And John Summers is a senior consultant who leads a top team of advisors from all over the country. Gentlemen, thank you for joining me.
Yeah, I'm glad to be here.
So in today's webinar, we're going to share some ideas on how to calm client concerns. Today's lines have been muted, but please use the chat box function if you have any questions or comments, and we'll be sure to get back with you. We also will pause for a few poll questions, and there'll be a brief survey at the end if you would like to connect with SMS. So, Steve, why don't we take a look at what we have on tap for the agenda today?
Yeah, you bet. I'd be happy to. So we're going to open up and really look at today's headlines, what is impacting really the mindset of the clients that you work with. And then we'll follow it up with how insurance-based solutions can really help your clients through these difficult times. And then finally, we'll wrap up with how SMS can deliver value to your practice and really grow your practice as well. So,
yeah, that's great. I'm really excited for our discussion today. Before we take a look at the current environment, though, why don't we take a look back on the last 20-some years on all that went on? Because a lot went on in the last 20-some years, right?
It did. Actually, I'd be happy to. So there's an old phrase, Chris, that says, may you live in interesting times. And I think the last 23 years kind of highlights that, we've lived through some pretty interesting and arguably challenging times over the last few years. And it's really the nature of the world we live in. But also, too, I think it highlights and showcases the value of working with an advisor who can really help their clients, ease their fears, as we go through these life events. So, yeah.
Yeah, Steve, I think it's really important. What we're talking about is kind of focusing in on the mindset of the retiree, right? So as advisors, how are we addressing these situations or these issues with our clients? And also for us, we've always said it's really important. We're not trying to motivate through fear. We're really trying to empower through education. Yeah. And I think it's important to understand today there's a lot of things happening all across the globe, and there's a lot of new information outlets as well. So where your clients are getting information, what information they're getting, what questions do they have? To me, it's never been easier today to position insurance-based solutions and even some investment solutions by leveraging the headlines of today, by helping them understand what's going on. And I'm sure your clients at or near retirement, if they were working in the last 20 years, they might have had a different viewpoint than where we are today than where we were in the last 20.
Yeah, you bet. Sure.
Well, let's move to the current environment. And guys, I just Googled headlines today, this morning, and here's what I found. Higher and more volatile interest rates, smaller central bank balance sheets, shifts in markets between banks, non-banks, and financial markets. So a lot going on, and as you see on the screen here, talk a little bit about what you guys are seeing with advisors today and some of their client concerns.
Well, Chris, I think it's just the 24-hour news cycle. If your clients are anything like my in-laws, they're plugged into, all sorts of news outlets that are really impacting their thinking and their approach towards retirement and what they should be doing today.
Yeah, and again, thinking through the lens of the retiree, I think they're thinking, how is this going to impact me? Both now and think about if you're thinking about retiring. Yeah. Maybe inflation, more so now than in the last 10 years, is important. So anyway, I think it probably hits everybody a little different, but it's really important, I think, for everyone on the call today to understand how they can provide the right information and have the right educational process for their clients on these topics.
Steve, let's dive into these headlines. Yeah. Let's start with market volatility.
Yeah, you bet. So I think we'd all agree investment losses are not fun, right? But they're especially damaging for those at or near retirement who maybe don't have the time horizon ahead of them to bounce back. And if you look here, 2022 was just a few months ago, and worst year on record for bonds, and equities were down quite substantial as well. So you have that double-digit losses in both bonds and equities, which I'm sure maybe made your clients feel a little uneasy at times. So
yeah, I think this is probably one of the easiest, or I would say maybe most advisors have the most experience talking clients through market volatility.
Yeah.
That happens often, right? I think what's important now, though, is looking at where are you going to go to provide safety and security for your clients. Mm-hmm. Historically, the bond and the equity markets have kind of yin and yang, but rarely do you find a year like this where you've seen both have a kind of get beaten up pretty bad. So in the current rate environment, that's definitely brought in some other solutions to consider.
Yep.
Well, let's talk about those rates, Steve. Historically low rates over the last decade, but now they're back.
Yep. So as you can see on this chart, the Fed's been really busy lately, trying to mitigate inflation, the other things going on in our economy. And it seems that the most recent federal market meetings have been must-see TV, right? And, everyone tunes in to see what's going to happen. And as you just said, we had a decade where we had historically low rates, but now we're seeing them come back up to the rates we haven't had since 2007. So it's really changed the landscape of not only product design and product pricing, but also maybe how we put strategies in place with our clients.
Yeah, and again, thinking about the mindset of the retiree or that person at or near retirement, when you think about the current rate environment, mm-hmm. there's a really good chance it's been since they were probably in a whole different financial situation to when they cared about these rates being as high. Yeah. So now if you were at or near retirement now, and now you're starting to see things from maybe even your local bank saying 4 or 5% for a CD rate for a year.
Yeah.
Maybe it's got a different interest, a different focus. So again, where are they getting this information? Why is it relevant to them in their current environment? Definitely seeing some changes. I'm sure people are paying attention. Yeah. We've seen significant growth in some guaranteed like products because you've seen market volatility in addition to the rate hikes. Yeah. So to me, it's not just one individual headline we're going to talk about, but it's really how a lot of these things compound the problem and or the environment we're in.
Yep.
Well, a direct impact of that is inflation.
Yeah.
And, we've heard our parents and grandparents talk a little bit about, the high price of gas, et cetera. But we really haven't had to deal with that lately. And, boy, I tell you, the price of gas is pretty high.
Yep. Yeah, it's interesting about inflation, especially with retirees is, for 40 years, inflation was something our parents and grandparents talked about, right? The 70s and the 80s. But now it's impacting all of us. And even though inflation's come down a little, we're still at pretty significant highs from previous years. And really just the higher prices is impacting, really all of us. So.
Absolutely. And it is one of those things probably in the last 10 or 15 years hasn't been as relevant or top of mind.
Yeah.
And you can read two different headlines. One might say we're in a hyperinflationary period and maybe it'll get worse. Then the next might say, oh, it's short term. But again, your clients have concerns about inflation for good reason.
Yep.
And it is something that I know a lot of advisors address differently within their practice. But now it's interesting to see from some of the polls and some of the things we've seen how your clients and the mindset of the retiree, they're concerned about inflation because they may not know. Is it short term? Is this here to stay? What's happening? So how are you as the advisor addressing that concern of your client?
Yeah. So something like 3 years ago wasn't even top of mind. Now it's top of mind. So once again, working with your clients to help them.
Well, that's a great point. I'm of the generation that I never really looked at gas prices, to be honest with you, because they were never that high.
Yeah.
But I'm looking at them now, and man, it's pain at the pump, as they say in the headline. So let's move on to the next, and that's yield curve. And this one, guys, I wonder a little bit, how much are advisors talking with their clients about the inverted yield curve?
Yeah. Well, it's probably something that clients aren't seeing, in terms of how we look at things, but they are noticing probably the banks, right? The banks are offering right now short-term CDs that are very, very favorable. And so I think that's an example of how we have this inverted yield curve right now. But I think more importantly, it's hard to say whether we'll have a recession or not, but the yield curve traditionally has been a strong indicator of an impending recession. So we'll definitely have to keep our eye on this, but something to keep in mind.
Yeah, you talk about interesting times. You can probably always think you're living in interesting times, but some are more interesting than others, like you mentioned.
Yeah.
And that's where, again, oftentimes the inverted yield curve as predicted or preceded a recession, right? So it's interesting to kind of think through, well, are we? And then different times on supply chain management, everything that we've had. But I think you nailed it. The biggest thing that your clients are seeing is shorter duration, even having better returns than longer, better yields than longer. And some of the advisor problems could be longer investments may not be yielding as much as you'd expect versus shorter duration. So it's just changed maybe the way that we would use some of the planning vehicles we would. But it's also opportunistic if it's understood and positioned the right way. So it could be, again, clients probably aren't going to call you up and say, so what about this inverted yield curve? I want to know more about that. But it is good to be aware in our industry of what that means for your client, because looking at longer duration products may not be as beneficial to short term.
Exactly.
Okay, so what I got from that is Steve is predicting a recession. Okay, good. Let's move on. So let's move on to bank failures. So you talk about headlines, and I think this one most recently is the one that's catching the most eyes. And I think to your point, John, earlier, the fear-mongering almost by all media outlets is the banks are going under. Is that the case?
Yes and no. I've got a lot of friends in the banking industry, and we don't wish ill will on them. But 2023 has ushered in a handful of high-profile bank failures that really, I think, has sent shockwaves throughout our economy. But more importantly, think about people that are retired and maybe some of the confusion they may have between banks and insurance companies. Maybe we'll take a deeper dive into this versus the other topics. But as you can see here on the graphic here, banks and insurance companies, more specifically life insurance companies, do a lot of good for economy and for people. They're financial intermediaries. They're valuable to our economy. But importantly, they're both highly regulated. And life insurance companies, the NAIC, they're there to make sure that they're structured properly, they're capitalized, and more importantly, solvent. And once again, maybe some of your clients have concerns about that. So
I think that's the key. I think I think a lot of people might think banks and insurance companies are more similar than different. But they have some very distinct differences that we as advisors might know. But how are you communicating that to your client? And I think there's definitely some clients that see that in the news, and they do think, again, which headline are you following? I'm more on the mindset of this is an opportunity to educate your clients on the differences. We talked moments ago about the rates and where they're at, and maybe some of the bank offerings that are being provided to your client. But in the same headline, they might have concerns about the bank industry. So anyway, it's just, to me, as we keep compiling all of the current headlines together, it's where I really think there's opportunity for education on a lot of these different fronts. And banks, if you just kind of look at a high level discussion that I think you could easily have with a client, they probably understand that they manage the flow of money between people and businesses. They're accepting deposits, and they're also leveraging or loaning out a lot of the money that's coming in, right? So that's one of the bigger differences. And also their loan requirements. I believe it's about 10 cents on the dollar is what most banks are required to hold in reserves, if you will. And that's just different when you're looking at insurance companies. One of the biggest differences, too, a lot of insurance companies are collecting ongoing premiums.
They are,
So not a deposit, rather premium. And as that's being paid to, they usually have at least a requirement of 1 to 1. And oftentimes it's more than that. If you look at a lot of A+ rated companies, even a few that we work with, we know they're withholding 3 to even 6 times the obligations they have on the books in reserves. So that should be a big difference between how banks manage their reserve assets and insurance companies manage their reserve assets.
You bet.
Well, we left the last one to be Social Security. And I tell you, I think this topic, and I'd love to hear your guys' thoughts on this. We've been talking about Social Security and with advisors talking with their clients about Social Security since before 2010. And maybe during those last 13 years, we've thought perhaps that has gone away a little bit. But now it's back, and it's going to be here for the next 18 months, especially through this election cycle.
I'd agree.
So
like you said, Chris, here at SMS, we feel that Social Security, is the foundation of the income plan and retirement, but it's going through some challenges, basically demographics, economics, but without congressional action, based on the latest trustees report, which came out recently, after 2034, Social Security can only pay 77 cents on the dollar of future benefits. And so, that's going to be a major headline. There could be some adjustments, could be some changes, but once again, this could elevate the concerns that your clients have about what could be their primary source of income. So,
yeah, I think that's the key. I mean, for a lot of people, they know Social Security is there. We talked about inflation earlier. Yeah. Well, a lot of people might recall one of the largest COLA increases to their Social Security benefit that they'd ever received because of inflation.
Yeah, exactly.
And some would argue it wasn't enough, right? And some would argue it was good, but it was good, but it maybe wasn't enough for everybody. This, again, I think is an opportunity for some to use fear as maybe as a motivator. To me, I think it's a really good way to educate our clients on just the reality of the situation. Yeah. They've got 10 years. Now, I personally think the can might get kicked down the road a little bit. They're probably not going to make some of these changes today, but over the next election cycles, I think this is going to be a big topic you're going to hear more about. So as an advisor, you should be very educated, I think, on the situation, just understanding what's currently happening and being able to have the conversation, because if not right now, I think the opportunity is going to present itself to educate your clients on the situation. Yeah. But you're right. Social Security is the cornerstone for a lot of people's income in retirement. And maybe someone in my age demographic might be more concerned on the future outlook for Social Security, but someone who's receiving it and understands as they get into their maybe 80s and 90s, it could even become a larger percentage of their income in retirement. They're going to be fearful. Yep. And so I think it's really important that you can be the sounding board to help them understand what's currently happening and maybe what to be paying attention to as we move forward. Yeah.
I'm kind of previewing what we'll cover in the second half here, but insurance companies are being innovative in introducing innovative products and riders to address some of these concerns. Yeah.
Well, and we always hear no politician wants to be the one that cuts Social Security benefits, but that road is nearing a dead end to where we're not going to be able to kick the can much further. Yep. So it'll be interesting to see what the next 18 months looks like.
Yep.
Knight, and I am from Russellville, Arkansas. My firm is Knight Investments Group. Been in this business for 30 years. I enjoy the business very much. I'm an investment advisor, do a lot of annuity business, and mostly I deal with those folks who are getting ready to retire or wanting to prepare to get ready to retire. My time is best spent sitting in front of the client. If I'm spending all my time researching products, trying to find the best product that's available out there, then that reduces the amount of time that I'm in front of either existing client or prospective client. Some of the things that SMS has helped me with is particularly evaluating products, specifically the annuity products. I rely on John and his team when I call and say, hey John, I'm doing this certain product. Is it the best thing out there? Because I don't want to place my client in the second best thing. I want to place my client in the number one best product that's available. Because if I don't put them with the number one best product, I did not do my job for my client. I lean on John and his team to tell me, hey, right now that is the best one of this type of product out there. And that way I don't have to worry about when I get in front of my client, what other products are out there. It doesn't really matter. This is the best one because that team has already evaluated that for me.
Welcome back. Yeah. Steve, thanks so much for your help on those topics and current headlines. John, I want to turn to you and really ask how advisors you're working with are helping their clients walk that tightrope. Specifically, we talked about 6 ways to help clients calm their fears. How are insurance products helping them calm their fears?
Yeah, great question, because it is a balancing act, right? So we just talked about a lot of the key headlines and the key things that are on your clients' minds. And we also talked about not motivating through fear, but trying to empower through education. Yeah. So I think as an advisor, that's one of our key roles, is to be able to educate on the appropriate topics. Yeah. And to be a student of the business as well, Steve. We talk a lot about trying to help connect our advisors with what's currently the best solutions in the industry. It's a big part of what we do. So we do have some proprietary relationships to provide unique solutions, but we also have stay up to speed with all the top carriers out there. So what's been happening? Talked about Social Security, talked about what we love about Social Security is the guarantee for income. We have a lot of advisors that supplement the income needs with additional products, like an annuity perhaps, but we've seen guaranteed income become a more competitive landscape. So being able to help provide and position guaranteed income with our clients, we have a couple of ways to do that through technology that I think is a really easy way to talk about guaranteed income and to be able to connect with the top income products in the industry. When you talk about portfolio efficiency, one of the things that we've done is it's not just, hey, take our word for it, right? We've been able to partner with a lot of the key academics in the industry and kind of backed by more of the science of the numbers than the sale of a product, and really figure out how we can position those products for portfolio efficiency. And we all know, too, a client is a lot more at ease in retirement if they know maybe 80 to 100% of their fixed income needs are guaranteed in retirement. And that can actually improve the efficiency of the whole portfolio. And you talk about the power of indexing a lot. And we like to talk about the recapture and the lock-ins that you can have with index products. What you see right now, too, look at last year with market volatility. One thing that's often overlooked is when you renew, when the market is down, you're renewing at that lower number. So it does give you higher capture opportunity on the way back up. So once you start to compound, just like we compounded some of the headlines and some of the fears our clients have, when you start to compound some of the solutions, it starts to be a really compelling story as well. You talked about the rate environment we're in. Well, one of the benefits there is MYGA rates. You know, we haven't seen fixed annuity rates where they are as high as they are today in a very long time. So shorter duration can be beneficial to the client, longer requirement to hold in a surrender charge schedule, but also better rates. So you were seeing that very aggressively right now. And you're also seeing, if you go back just even 10 or 15 years ago, we've seen a lot more companies enter into this space and see the opportunity to provide solutions for those at or near retirement. That increases consumer choice. That increases benefits to the end consumer. So really being a student of the business and knowing what's going on around us and what carriers have maybe been doing this a long time with a great A+ reputation, and maybe some that are brand new that pose some different risks. That's why you'd want to work with an IMO that really understands the landscape. And you talked earlier, too, about some of the rider benefits. A few of those carriers and a few of our proprietary relationships have created solutions to kind of provide multiple benefits and take some of those concerns away from your clients' concerns, including Social Security. So there's a retirement benefits rider that does exist that does provide some additional benefit if Social Security was reduced for that individual person. And you know, a lot of what we talk about in our landscape too is taxes, because it's not about how much you have, it's how much you can keep.
That's right.
Right. So
That's
we see a lot when it comes to taxes as well.
And we did talk about that earlier, but you know, a lot of people do think that taxes are going to go up, you know, eventually just because of what's going on. And so for people that have a lot of tax deferred money, you know, it's a big risk that they have to mitigate as well. So the great thing about insurance products, they're very tax efficient, whether it's life insurance, long-term care, you know, even annuities, they offer tax benefits that other products can't offer. So.
And, you know, we've talked about for years the tax time bomb that's coming. Well, it's here. In fact, we wrote a white paper on it, right? The tax time bomb. And so helping clients mitigate that risk, insurance products certainly can do that. So, John, you know, a lot going on out there, a lot of solutions, definitely. How can SMS help advisors pull it all together?
Yeah, everyone's challenges can be a little different. But for the most part, there's a lot of similarities there, too. And I think over the 40 years of SMS being in business, we've really been able to help identify a lot of those concerns or a lot of those problems that advisors face. Sometimes it's a timing perspective. Just need to create or leverage more time within their practice. A lot of what we talk about is branding and marketing, how to help you get your business, your name out there more, connect with more people. So we've done a couple of very unique things. We've always been engaging when it comes to the typical lead generation tools. We also have a couple of our own proprietary lead programs like Lead Exchange. So that's something that we've done to try to help our agents connect with more people efficiently. Part of that efficiency is with technology. We've always tried to be a leader in the technology space and to be able to provide solutions that help our advisors either save time, connect with more people, or put their business in a position of distinction. And I think that's really important for us. And again, it's leveraging technology the right ways to help solve business problems. So you can take some very complicated situations and make them easier if you have the right technology solution. So I think that's a big part of what we do. And then, of course, when it comes to products, we do have some proprietary relationships that aren't available to everyone in the industry, which has been advantageous for us to be able to work with those carriers and create products that are going to provide solutions that are unique to our advisors.
Awesome.
That's great. Well, I wrote this down. Help advisors save time, connect with more people, and put their business in a position of distinction, right? That's great. Thank you, Steve, and thank you, John, for taking the time today to join us. It was great information, and I think I learned a lot. Hopefully, you learned a lot as well. I want to thank you for joining us today. There will be a brief survey after the webinar, and then you will also receive an email with an opportunity to participate as well and be able to reach out to us to be able to learn more about any of the topics we covered today and how we can help you grow your practice. With that, thank you so much from the SMS Home Office. Have a great day.